Welcome back to the channel. I'm Algabot, and this is where we take apart automated trading strategies for MetaTrader 5 and study how they actually think. Today we're looking at an expert advisor called Decycler Trend Pullback. It's built around a clever filter from John Ehlers called the Simple Decycler, which splits price into a smooth, low-lag trend line and a separate cycle component that swings around zero. In this video, you'll learn how that single filter defines both the trend and the pullback, how the entry conditions line up, and how the stop loss, take profit, and trailing stop are managed. This is educational information only, not financial advice. Let's dive in. Let's start with the big picture. Decycler Trend Pullback is a trend-following strategy that waits for a temporary pullback before joining the move. What makes it interesting is the tool it uses to see the market. Most systems reach for a moving average, but a moving average always lags, and that lag creates a conflict when you try to define both the trend and the dip with the same line. Ehlers Simple Decycler solves that neatly. It runs a one-pole high-pass filter on the closing price. Subtracting that high-pass output from price leaves a smooth trend line with very little lag, which the author calls the Decycler. And here's the elegant part. The high-pass output that you subtracted is itself the detrended, cyclic part of price. It naturally swings around zero. So one filter hands you two orthogonal pieces at once. The slope of the Decycler tells you the regime, whether the market is trending up or down. The high-pass line tells you where price sits inside that trend, above it or below it, at any moment. The strategy is written with foreign exchange majors and gold in mind, on time frames from 15 minutes to 1 hour, but the time frame is never hard-coded. It simply uses whatever chart you attach it to during testing. It's suited to a trader who is studying systematic, rules-based trend continuation and who wants to understand how a single mathematical construct can measure trend and pullback together without the two definitions fighting each other. As always, remember that trading carries real risk, and losing trades are a normal part of any approach. Nothing here is a promise of returns. Now let's walk through the exact logic. The expert advisor acts once per closed bar, so it never repaints or reacts to the flickering current candle. On each new bar, it rebuilds the Decycler filter over a long window of closed prices, and it reads the current volatility using the average true range, or ATR. First, it measures the trend. It takes the Decycler line and looks at how much it has risen or fallen over the slope loopback bars, which defaults to 4. It divides that slope by ATR, so the trend is expressed in volatility units per bar rather than raw price. This normalized slope must clear the trend threshold, which defaults to 0.05. If the slope is above the positive threshold, the trend is up. If it's below the negative threshold, the trend is down. If it's in between, the market is judged too flat and no trade is considered. Second, it inspects the cycle, which is the high-pass line swinging around zero. For a long, two things must happen. The cycle must have genuinely dipped, meaning its lowest value over the recent window reached at least MinDipAtr times ATR below zero, with a default of 0.15. That confirms price really sagged beneath the trend line rather than just wobbling. Then the cycle must cross back up through zero, which says the pullback is finished and the trend is resuming. When the uptrend, the real dip, and the upward zero cross all line up, the strategy signals along. The short side is the exact mirror. The trend must be down. The cycle must have rallied at least MinDipAtr times ATR above zero, and the cycle must cross back down through zero. On entry, the EA places a stop loss at ATR times the SLATR multiple, defaulting to 2, and a take profit at ATR times the TPATR multiple, defaulting to 3. That's a 3-to-2 reward to risk shape by default. There's also an optional trailing stop set by TraiLATR multiple, defaulting to 1.5, which only ever ratchets in the favorable direction, never against the trade. Only one position is held at a time, so the trade is left to its stop, target, or trail. Let's read the code as it would appear in MinDipAtr. At the top are the inputs you can tune. DecyclerPeriod sets the length of the high-pass filter. Slope loopback is how many bars we measure the trend slope over. And TrendThreshold is the minimum slope in ATR units before we call it a trend. MinDipAtr is how deep the cycle must dip to count as a real pullback, and ATR period feeds the volatility measure. SLATR multiple, TPATR multiple, and TraiLATR multiple scale the stop, target, and trail, and ATR multiples. Below the inputs, we compute the pieces. Norm slope is the Decycler slope divided by ATR, giving trend up and trend down. Cross up is true when the high pass line was at or below 0 last bar and is now above it, the pullback reclaiming the trend. Cross down is the mirror. Now the buy block. Long signal requires trend up, cross up, and that the minimum high pass value dipped below the negative dip floor, confirming a genuine sag. When all three are true, the entry is taken at the ask, the stop is placed 1 SOR multiple of ATR below, the target 1 TR multiple above, and trade.buy sends the order. The sell block is the exact opposite. Short signal needs trend down, cross down, and a real rally above the dip floor. The entry is at the bid, the stop sits above, the target below, and trade.sell places it. Same structure, opposite direction. Let's walk through this illustration candle by candle, because it shows both a long and a short exactly as the strategy defines them. On the price chart, the blue line is the Decycler, the low-lag trend line. Underneath, the gold subpanel is the high-pass cycle, the detrended part of price that swings around 0. The green dashed level is the dip threshold, the red dashed level is the rally threshold, and the middle is the 0 line. Look at the first two candles. Price is climbing and the blue Decycler is sloping steadily upward, so the trend condition for a long is already satisfied. The cycle in the panel is sitting above 0 because price is riding above the trend line. Then the third and fourth candles pull back. Price sags beneath the blue line, and watch the gold cycle drop. On the fourth candle, it pushes down past the green dip threshold, reaching well below 0. This is the strategy confirming a genuine pullback, not just noise. The lowest cycle value has cleared the required depth of 0.15 ATR. Now the important moment. On the fifth candle, price turns back up and closes above the rising Decycler again. The gold cycle crosses back up through the 0 line from below. That combination, an established uptrend plus a real dip plus the cycle reclaiming 0, is exactly the long condition. The buy entry marker appears here. The stop loss is placed a set ATR distance below, structurally beneath the recent pullback low, and the take profit sits above at the larger ATR multiple, giving the default 3-2 reward to risk shape. From there, the trend does the work. The next candles push higher, each one closing above the blue line, and the cycle stays firmly positive. Price reaches the take profit target marker on the 8th candle, and the long is closed. Notice how the entry came right as the pullback ended. So the trade joined the trend at a favorable point rather than chasing the top. Now the character of the market changes. Around the peak, the blue Decycler flattens and begins to roll over. Over the next candles, it slopes downward. So now the short trend condition is active. Price makes one more push up, and the gold cycle springs above the red rally threshold, telling us price has rallied above the falling trend line. That's the pullback for a short, a bounce inside a downtrend. On the candle after that, price rejects the rally and closes back below the Decycler. The cycle crosses down through 0 from above. Downtrend, a real rally that cleared the threshold, and the cycle losing 0. That's the full short condition, and the sell entry marker prints. The stop loss goes a set ATR distance above the rejection high, and the take profit sits below at the wider multiple. Price then slides through the following candles, each closing beneath the blue line, until it reaches the lower take profit target marker on the final candle. Both trades followed the same idea in opposite directions. Define the trend with the Decycler slope, wait for the cycle to complete a real pullback, and enter only as the cycle crosses back through 0 in the trend's direction. Of course, not every setup reaches its target in practice, and the stop loss exists precisely because losing trades happen. So that's the Decycler Trend Pullback Expert Advisor. We saw how Ehlers Simple Decycler splits price into a low-lag trend line and a zero-centered cycle, how the strategy reads the Decycler slope for the trend and waits for the cycle to complete a genuine pullback before entering, and how the ATR-based stop loss, take profit, and trailing stop manage each trade. We also read the core buy and sell blocks straight from the MQL5 code. Remember, everything here is for educational purposes only and is not financial advice, a recommendation, or a solicitation. Trading carries real risk, and losses are part of it. If you found this useful, please like the video, subscribe for more MetaTrader 5 strategy breakdowns, and leave a comment with the strategy you'd like us to study next. You can find more at www.algobot.live. Past performance does not guarantee future results. Trade responsibly.